Awesome. Rohan, welcome. Good to see you. It's been a while.
Yeah, it's been a minute, Satwik. How you doing, man?
Good, good. Yeah, just being busy, but good to see you. Thank you. I was just telling Kevin as well. Thank you guys for making it today. I know you guys have a lot going on, so appreciate the time.
No, thanks for having us. Like, you've got a great community to get together, so it's exciting to see what we can, hopefully we give some nuggets that's useful.
Yeah, for sure. Cool. I think we have almost 30 people in here now, so let's get started, and I'm sure a few more people might trickle in as well. But really, the agenda for today is I shared with both of you is I have some questions prepared for both of you individually, some for Horizon Labs to tackle together. We'll just kind of go that way, and then at the end, if we have some time left, I'm sure the audience might have some questions too. Sounds good?
Sounds good.
Let's do it.
Awesome. So just to start, I'll kind of give you guys the mic now and would love to just learn a bit more about your background, your experiences, maybe how you got into Web3, just so everyone on the call has a better
Awesome.
sense of who you are and where you come
Rohan,
from.
welcome.
So,
Good to
Rohan,
see
maybe
you.
we'll
It's
start
been a
with you.
while.
Yeah, it's been a
Yeah,
minute,
for
Satwik. How
sure.
you doing,
Thanks
man?
for
Passing on the mic, Satwik. Just as a
See you.
quick
Thank you. I was just telling Kevin as
overview,
well.
so I'm the founding member and the head of biz dev at Horizon Lab Ventures. Horizon Lab Ventures is set up as a Web3 advisory firm, where we help our clients' projects, whether they're Web2 or Web3 based, all the way from strategizing to helping them figure out the tokenomics to facilitating legal aspects, working with market makers, listing on exchanges, um, on the smart contract development, setting up the DAO. So the whole swath of what you can possibly do in Web3, we help orchestrate and risk management that end to end. One of our flagship projects, well, that's kicked off everything within our world, was the Yuga Labs team and the Ape coin that we helped launched with them, right? So that took over 6 months, and the rest is history. And then we continued on that success. But how I got into crypto has definitely not been a linear path. I started off as a consultant, as a management consultant at Ernst& Young. I spent some time in San Francisco and then moved to Singapore. That's where I saw a lot of gap that existed in the monetary or the financial systems that existed back then, right? In Asia, crypto was quite relevant already, and what people really wanted to do was leapfrog from the existing system that was already in place, and that's where crypto came into effect. So I helped coordinate and build kind of a round table with all the major institutions, trying to figure out what are some of the use cases. Came across the Ethereum white paper. That was how I actually got into the space, not the Bitcoin, which is typically what you hear. And I was so enthused and infatuated by the fact that there's so many possibilities in this space, and just went on learning a bit more, getting a little bit deeper what the technology enables. Came back to the US, worked with a financial institution starting off running their venture studio, then investing in early stage startups. Formed a joint venture with a UK VC firm, investing in like blue ocean strategy or white space opportunities. Worked very closely with Consensus and Joe Lubin and his team to figure out like what are some of the possibilities from a product standpoint, or to create some joint venture that enables. And mind you, this is when Ethereum peaked at around 1400 back in 2017, early 2018, and then it went all the way back to 80. And I'm in this like deep trench when the market is at 80, the confidence level is an all-time low, crypto is dead, there's nothing happening. And then came back, you come across the other side, and then you realize like there's a lot more thing being built during this time. That we're going through a similar cycle, and that actually basically propelled me into a direction where I wanted to continue to be part of this crypto and Web3 ecosystem. I advised a bunch of startups that were early in their stage, helped raise capital, invested in some of the early stage startups, worked with OWC, which is Near Protocols Accelerator, and then Raritable's DAO ecosystem, one of the earliest marketplaces for NFTs. And then one thing led to the other, and Horizon Labs and Horizon Labs Ventures happened. and we kicked off the advisory practice. So that's kind of been my journey all over the globe in all of different aspects, trying to bridge the gap between what people know and understand and what's actually possible.
Awesome. Thanks for sharing, Rohan. I think it's definitely an exciting journey, and we'll get into more of the details of kind of the intersection of your TradFi experiences and now with DeFi and NFTs as well. But Kevin, I'll hand it over to you with the same question, just learning a bit more about your background and how you got into Web3.
Sure. Yeah. Yeah. And I think for me, I'm coming into this much more from a, technical and operational context. So, for me, my background really started off in software development. So, my traditional training, spent some time, a good amount of time in software development. Really was interested in business and operations side of things, and really pivoted to management consulting, where I worked at Deloitte for a number of years. And then later on, after that, went back in the industry, working in leading and building professional services organizations and customer success organizations. So really, my previous context and that entire part of my career was really focused on enterprise healthcare technology. So think very long, large-scale implementations at hospital systems, trying to implement very complex technology with lots of different moving pieces, lots of different stakeholders, lots of different integrations, all that culminate on a single day's go live, where everything has to be coordinated perfectly for that launch to happen, and be successful. There's no chances at sort of at failure at that point. So really, the previous company that I was at, we ended up getting acquired, and it took some time to think about, what I wanted to do next. I had actually just gotten onboarded into NFTs from a friend at HLV, and the rest is kind of history. I just realized that, hey, like, this is an amazing opportunity to one, work on new tech, but create, basically cultivate some amazing ideas. And really what I saw was an opportunity for me to take some of my, I guess, more sort of, enterprise playbooks, a more sort of traditional sort of background, and see where I could help, fill in the gaps. One, learn as much as I could from the community around me and all the amazing ideas that they had, but also lend my skill set in basically managing large scale implementations. And I realized that, hey, actually, in order to pull off, things like token launches, things like major NFT activation, project activations, there is a very close lens to execution quality and execution planning that has to be put in place. And these things, while they vary very much, from project to project, there are certain playbooks and processes and repeatability that we can put into place, so that the next project that wants to launch their amazing idea has some sort of lattice and has some sort of playbook to be able to work with, right? So really, I felt that, that was a great way to be able to lend my skill set in just helping raise the execution quality of our space overall. So that's what got me super interested, and that's what brought me to HLV, and I really wanted to work with a group that was interested in solving and tackling that specifically.
Thank you for sharing, Kevin. I think that was a great intro, and we'll kind of stick with you for my next question. So, you touched on this a little bit with how your software development and your tech backgrounds really helped you, I guess, in some sense in the Web3 space. So, I just love to understand a bit more, maybe, about how this background and kind of the crossover with your work now and strategic partnerships has really played out. Because I often come across a lot of software developers who just think all they can do in Web3 is really, stick to software per se. So I'd love to learn from you what kind of other opportunities might exist and how your tech background has helped you in just managing some of these large scale enterprise deployments that you do.
Yeah, I mean, I'd say that ultimately, right? Ultimately, you know, these things that we want to accomplish do start in the software product itself, right? I would say, both the sales aspect and the software product itself is extremely important. Um, I think, the opportunity to see a lot of deployments basically come to fruition. Some of the realization is that yes, absolutely, the software product is so important and so critical. Without it, you don't have an actual customer base. You don't actually have anything to provide. There's no solution set. But one of the things that I realized, kind of going, kind of shifting from software development into more business role, is that there's also a scoping exercise that has to be done as well too, because ultimately there is a day of launch that has to happen, and with that day of launch, right, there are certain sort of constraints and dependencies that have to really be put in place. There are hard decisions for software teams to keep in mind to be able to deliver, right? So I mean, I think with a lot of software teams very passionate about basically continuously delivering and continuously pushing to production, right, you kind of eliminate sort of some of that sort of writer's block and sort of over engineering too much. In Web3, I think that's also an area that we'd like to see a little bit more, is like, how do you continuously evaluate product market fit, continually launch product, push product to production, so that that, hey, like, we're not just working completely in a vacuum, right? I think the tricky part is also going to be in Web3, though. You're also building in some ways in public, right? So I think there's a tricky balance to play with go to market, right? And I think one of the things that we would recommend right now is actually keeping communities fairly small at this point, right? To be able to get the validation points and the folks that actually care a bit. But yeah, to bring it back to sort of my background, I think really it was fun for me just to be able to see all of the different aspects of the life cycle of a product itself. I think that's definitely been helpful in just helping frame these implementations that we work together with our partners on.
Thank you for sharing. And just kind of going off your point about PMF and leveraging a small community, Rowan, I'll come to you with this one. So you have this kind of consulting and TradFi background to an extent, and now in the Web3 space, where seeing a lot of conversations pop up around tokenomics, DAOs, governance, and how all those things can really go towards the success of a project, essentially. But there's still a lot of work to be done around actually leveraging some of these more TradFi, DeFi tools. So I'd love to learn what you foresee as kind of the future of how all these different factors can shape up for project success.
Yeah, no, I think it's a great question, and the similarities are pretty uncanny in the sense that we oftentimes we take technology and the products that we currently use for granted. It's always hard to go into the weeds and figuring out, okay, all the TradFi, the Robinhoods and the Wealthfronts, and I don't know if you've used any other of these applications, took a long freaking time to come to fruition, right? But that's typically what we as an internet user see. And my thesis is that we are going through this similar cycle. Internet has been around for a while. First phase happened where you were taking a very typical brick and mortar business online, trying to build a business around it. There was experimentation. Next phase, with the network and your server speeds and the storage capacity kind of multiplying, you had a lot of, and obviously the big advent of the mobile phone, you saw a lot of application moments come to life, right? Because internet back then was just read only, then it became read and write. Now we are heading into the phase of read, write, and edit in some which way or form. And I think the paradigm shift that's happening is we have reached the peak in what the traditional Web 2 can offer from an experience standpoint, right? You created almost sort of an imbalance of the value extraction being done by larger companies and users getting the short end of the stick. But this neat paradigm shift where we are going is back in that early phase of internet, where we are experimenting with a lot of early applications, but the application experience itself is very broken, along with the non-scalability aspects of a lot of these protocols that are built, whether it be Ethereum or Bitcoin or Avalanche. They're all incrementally different, but they all have the same siloed factors and problems that most of the large businesses of today, right? Data cannot move from Facebook to Google to Amazon, and they would never share that in absence of the bridges and interoperability mechanism. That's still happening. So it's very easy to overlook all of this. What I see, if we are to follow a similar path of evolution, because all any innovation happens in these cycles, whether it be the car, whether it be the internet, whether it be the application. Now we talk about crypto or even AI, they all go through the same flow. The next step of evolution I see is these applications that are coming to life that offer an actual user experience. And what fintech companies have done right as part of that second or third wave is they understand what are some of the mistakes that have been done in the past, what are options in terms of scale exist, what are the most, you know, the digital transformation that can happen using the current set of tools, and build applications on top of it by identifying problems, right? So uh, unless that happens, we'll continue to be in this kind of a small group of people who are using primarily tech evangelists, or geeking around just creating products which we think are useful to us because our scope is so limited, right? So unless the user experience is fixed, unless the technology is able to scale, it's very hard to attract anyone. Like, my personal belief, like, why the hell do we need like 30, 40, 50 different L1s, like when they're all pretty much offering you the same thing, right? Unless you can find a way to bridge all of these technology sets, let's stop actually building stuff and just protocol layers, but instead make applications that are really useful. None of that really exists. If you call exchanges as an application, I'm sorry to inform you, they're all centralized. They're still Web2 based, and you don't even hold your keys. So I think the next phase needs to be really focused on the creative and the user experience aspect, and how you can delight a user by giving them a product that they actually want to use and love. And as a user, I shouldn't even care what's happening in the background. I shouldn't have to worry about like where my keys at, who's giving me what yield percentage. All of this needs to happen in an automated fashion in the background. That's really is the unlock for sort of mass adoption, if you will. And that's what I've learned through my experiences as a consultant, and just kind of seeing the TradFi and how they have evolved.
Yeah, no, great answer, Ron. Completely agree. Also, I say that there's more blockchains than users at the moment. So, I completely
Yeah.
resonate with your point about there being too many L1s. I'll say with you for my kind of follow up on this is you've obviously worked with now some of the biggest brands in the space, ApeCoin, Sandbox, Animoca. And you said that it is still very early days of Web3. It is new tech. It's a new playground for all of us. So I'm curious with deploying some of these projects or helping them through their activations, maybe what are some strategies or insights that you might have come across that other builders who might be looking to experiment in a similar fashion around tokenomics, NFT launch, product launches could maybe learn?
Yeah, that's another great question. I wish I had a, give you like, this is what you do and this is how you make millions. I think there are certain ways which a lot of these uh, MLMs, if I'm using the right word, they exploit, trying to give out meme coins and a lot of the scam projects. That's one way to do it. But if you are to do it right, there's no one right or wrong answer, right? The bottom of it, as sort of an advisory team that we have in place, it's about going to the fundamental of like, what's the strategy? Each project should ideally have a different strategy. Don't try to be ApeCoin or Yuga Labs. That was good for its time. They have done it, experimented. A lot of things stick, a lot of things will not stick in the future. So let's not do a copycat project, right? So understanding that aspect. B, I think the biggest shift, as you would all notice, I mean, everyone here is within this space and actively building or operating in some which way or form, is community matters, right? One of the things I keep telling our teams is have open communication with your community. They will make or build your project. And to Kevin's point, try to keep it small. What happens is, like, when you build a massive community, then you struggle to keep up with the expectations that you have set forth, not by you, but the community. They are essentially expecting returns. Like it or not, people expect things in favor of supporting your community. And in a space where attention is so limited, and every other day you have a new project coming out, how do you continue to manage those expectations becomes key. Then there are projects that'll do vampire attack and take your entire community along with all the assets that you have. You become the exit liquidity. So know your community well. The founders become the exit liquidity, sadly, in some way, shape, or form. And then lastly, I would say from um, vision perspective, right? Try to do things in a little more thoughtful manner, right? There, like from Web 2, what I've learned is there's always this product market fit or PMF that keeps coming up and up again. It's tried and tested methodology, right? If you're looking for a playbook, if you're looking for some skeleton structure, use that to an advantage, right? Oftentimes you'd see you'll be successful to an NFT launch, and then for the entire year, 2 year, you're struggling what to do because you are a victim of your own success. You've amounted a lot of capital. Now people expect things in return. So take baby steps. Bring in the right advisory team. Bring in the right build the right partnership. Build an ecosystem. Have an elevator pitch as to what your product is, what it's going to do, how it's going to help elevate the value proposition for your existing community. So I think those three things done and understood in tandem can really elevate a product status, its founder status, and I think that's how you build operators and long-lasting companies, and not just a project that will blow away with the next small bearish markets.
For that, Rohan. Kind of staying in the same vein of successful projects and longevity. I'll go to Kevin now. Kevin, you in your bio shared that your favorite NFT collection is Pudgy Penguins. A great example of a successful team and brand established in the Web3 space. So I'd love to hear from you, Kevin. What is it that specifically draws you to Pudgy Penguins? And in general, what do you think are some of the successful things that NFT collections across the board have done, the way, whether they've leveraged their IP or their community? What stands out to you?
Yeah, I mean, with Pudgy, I had come across them and I didn't really think much about them. The reason why I ended up buying into it was because I was just showing my wife, the different NFTs that I was participating in, and she's like, "Hey, like, what's that penguin? It's like super cute." And like, I like that thing a lot. So like, I was like, "Oh, that's kind of interesting." So that's really what kicked it off. Really, was it had nothing to do with Web3. It was really just kind of sparked kind of an imagination and sparked a connection with her. And then I discovered all of the memes. Well, she actually discovered the memes. She was like, "Hey, did you know there's Pudgy Penguin like memes on Jiffy?" And she just started sending me these memes, and we literally have conversations like with Pudgy Penguin memes. So it's created this sort of sense of connection, right, completely outside of Web3, and completely outside of the sort of NFT trading sort of marketplace, right? That that made me sort of sense that, hey, actually, like, if they're able to get this kind of exposure outside of our echo chamber, right, and sort of expand beyond sort of this, and basically survive and thrive beyond this, right, then there's actually something there, right. I think a lot of projects have attempted to do this, kind of this mainstream sort of concept, like, oh yes, we're actually now shifting our focus to target on Web 2 and mainstream users, which is amazing, and which is kind of an approach that should be taken. But in a way, it's like, they've they've kind of alienated their their sort of NFT sort of core centric communities in order to do that, right. I think where Pudgy's unique is that they've found a way to basically keep both happy and keep both sort of connected in a way, right. It's not, hey, we're ditching you guys to do this. No, you guys are a core part of the IP. This is actually what's happening on the other end. Of course, leadership has a lot to do with it, but I think really for me it was, hey, like, that was the aha moment, right? Was that, hey, this has life beyond, right, our sort of specific bubble within NFT world.
answer, and I saw someone say relationship goals in the comments, and I completely agree. Yeah, I think the way, I mean, one, Luca is a brilliant founder. I think his execution's always been amazing. And I do like the idea that a lot of Web3 projects now seem to be embracing is really kind of going after this mass market, not from the lens of NFT specifically, but more leveraging their IP. I think Pudgy Penguins with their Instagram and Jiffy are doing really well with it. I know Azuki's Beans have started something similar as well. So it does still seem like that kind of path to mass acceptance, where maybe Bored Apes are traditionally trolled by the anti-NFT crowd because they've now become a symbol for all things that are wrong with NFTs. So I completely agree with your perspective, and just kind of going down that route, Kevin. I'd love to understand in your experiences. I know you've designed this implementation playbook, and you've obviously helped a ton of Web3 brands navigate this space. So I'd love to learn what are maybe some of the challenges that you've seen Web3 brands have had to face. And if you've just any general guidance for how projects could navigate those challenges for fruitful outcomes.
Yeah, I mean, I think one of the first, one of the things I was talking about earlier was sort of this. There's a strong desire for every project to come up with every idea under the sun, right? And really, tease out every idea to the nth level of detail and sort of continue to prepare and prepare and prepare. I mean, one of the things we do during a fungible token launch process is, hey, like there's a day one scope. It's going to go live, and you're going to have a claim or a product activation to pair with that go live, right? It's going to move sort of whether whether you feel that that product is ready at that moment in time, or you feel like you need to have a ton of sort of features on that initial day, right? There needs to be an acknowledgement of, hey, like there is a day one scope that we're going to market with, and we're committing to that particular launch with. Now, I think one of the strategies that ends up helping sort of ease some worries is that, hey, actually your day one launch is your initial sort of coming out party, right? That doesn't mean that 30 days, 60 days, 90 days afterwards you can't have product activations that stack up against that, right? The moment you try to do too much in a product launch, right, is where you start to introduce a lot of execution risk, right? When we think about in the context of a fungible token launch, what's the purpose of a fungible token launch? It's to get the token launched, right? It's to make sure that the exchanges are put in place properly, the market makers are coordinated properly, the technology, the token distribution is put in place, all the steps and the sequencing, the wallets, the claim, all of those techniques exactly perfectly. It's not necessarily to add every possible sort of product functionality into the system itself. Those can follow on. And I think, once you kind of, realize, hey, actually, we should be building the background and planning for the launch sort of sequencing and the go-to-market sequencing afterwards, but really focus our core effort on what's most important for that specific day of launch. It's a bit freeing in some sense, right? I'd say the other sort of thing is, yes, I think with NFT projects, yes, the core product in itself is in some ways the actual IP. I think there are a lot of projects out there that aren't actually NFT projects, right? Which is good, right? Which is actually core products and services and tool sets, right, that are leveraging Web3. And I think that the key there, again, depending on sort of the vertical, the customer target, customer vertical that you're taking a look at, I think the key there really is going to be that it's not sort of a Web3 led. In some cases, it won't be a Web3 led product, right? It's more along the lines of, hey, there is a product concept that we see a market need for, right? And we think our product has that market fit. It just so happens that Web3 is the technology, the Web3 ethos is the foundational layer that helps support it. But it's not the other way around. It's not sort of, hey, this is the next sort of Web3 product, right? So I think that's another, depending on the type of sort of, target market you're going after, I think that's also another thing to keep in mind. I mean, was just talking to a company called Relic Tickets, right? That's doing ticketing platform on that's really based in the background, is powered by Web3. But everything, like Rohan's saying, everything out in front, right, is not necessarily talking about sort of the Web3 aspects. It's what the Web3 tech helps you achieve, right? Which is, hey, you can reduce ticket fraud, you can make transfer, you make selling easier, you can eliminate scalpers, you can do reissues. Those are the outcomes that you're looking for. It just so happens that Web3 is the supporting technology that helps you get there.
I do agree. I think we saw this especially during the bull market where every NFT project was trying to, launch a gaming project as well as a TV show, as well as merchandise, as well as toys, because they just couldn't narrow down their scope, kind of what their market really wanted. So I do agree. I think finding their own niche, what works for them, it doesn't even have to be, like you said, blatantly in your face Web3. As long as you're using the tech to become more efficient as a product and a company. Rowan, kind of just continuing on this tangent, you obviously have a ton of experience as an angel investor, making investments in the space and, even in deep tech, fintech, all those areas. So I'd love to understand in your perspective, what are some of those qualities, maybe niches and focus areas that you really look for when you're deciding whether to invest in someone or work with them? And just also, we have a ton of companies in our community that are actively fundraising or about to start soon. So I do think your perspective from that investor side is going to be really helpful for everyone.
Yeah, no, happy to. But before I get into that, I do want to connect that little dot, what Kevin was saying around, not every project or every product requires that Web3 aspect to it. Uh, Not to over dilute or simplify it much, what's really happening is we are going through some of a digital transformation. We have seen this happen in the past. That's really what the underpinning of this, all of this is. What we are noticing more and more, though, there's so the tokens, the fungible tokens, the beauty of that is they are incentive alignment mechanics, nothing more, nothing less, that helps enable an ecosystem. What's happening right now, there's a massive gap between the founders and the communities and the expectation set. So the force fitting of tokens is absolutely absurd, right? There are some founders who think this through and try to launch a token that actually serves a meaning. A lot of that, what we are starting to see, can happen in a testnet environment. You don't necessarily need a token per se until you actually figure out if this is usable, right? So stop force feeding a token without actually knowing what the incentive for that is. And from a community to expect that there needs to be a token, you don't have to listen everything a community says. It's good thing you have, but you are the eventual founder. You will be held accountable for the success or failure of your project. Community is going to go to the next project that's delivering, right? To focus on delivery and not focus on every single comment and the FUD that gets created. But keep an open communication, not to ignore them. That's what I'm saying. So, okay, now coming back to your question. Um, so when I started off, I think from an investment standpoint, I think I'll do a massive disservice if I just put money and be the source of capital for projects. What I really enjoyed is, I have a background in engineering, so I like to tweak and find the most granular stuff of how things work and how people and operators think and what they're envisioning. So that was a lot more exciting to me. So that's why I go on like early stage startups where I can actually handhold and work with the founders, advise them on what's the strategy, what needs to be worked on, where they're thinking, and just kind of be the nudger in a way, but be very direct, right? Whether it be on the go-to-market approach, having a singular focus, or just, why Web2 and Web3 approach when all you really need to be is in Web3 or you really need to be in Web2. Sometimes the fit does not exist, right? So that was very critical to me. But when I look at teams and projects, what really needs to shine above anything else is the operator and their business development skills. Because at the end of the day, when you're early, what you're really trying to convince people is your storyline, your narrative, and what you're building. right? At that stage, it becomes less about the product, but what is the vision you're trying to drive towards? And do you have the drive to bring in the people who will make that vision become a reality? Apologize for my friends talking in the background. Hopefully it's a good background. So that's the one key. The two is you want to look at the area that you're building in, and does the founder know, or the and the area where the founder is building in, and does the founder know its competitive landscape? You do not Investors typically don't want to put money where there's too much competition and there's not much room for growth, right? If I, to your point, like if I go and look into NFT projects, there was a massive pump of capital in this space. Would any investor go and do that right now? No. Same thing will likely happen maybe in the gaming space, unless you have a war chest of capital to bring a game to life, a triple A game to life. You're not going to survive. It costs 100 200 million dollars to actually build a triple A game company, and most of the companies, they bleed money. And I guess third in that order of event is the industry experience. Like what what I mean by that is twofold. One, have you participated in this space before? Are you just like, okay, let's slap a blockchain, or let's slap an AI, or let's slap the latest trending term out there and build something out because we can? Because what that does is, A, it's not honest enough, and B, oftentimes you fall into the trap of building a solution before identifying the problem. So if there's not a big enough problem to solve for, then the founder and the team really does not know that there is a need for this product. So those are kind of my three filtering mechanism. And after that, there's a bunch of other things as you get to invest a little more time from a due diligence perspective. Like, do they understand their market? Do they know their landscape? Like, how much money is being asked for? Like, how much are runway? What are they going to do with that capital, etc. So, but those three become an immediate kind of a litmus test, so to speak, for me in the past, and I think the same thing is true even in Web3, to figure out whether the project is likely going to sustain a different kind of market swings.
Thanks for sharing. Just kind of staying on that investments team, I guess this is open to both of you as reps of HLV, but wanted to learn a bit more about Denari Labs in this landscape right now where a ton of accelerators and VCs are moving on to AI or spatial AR. You guys seem to have doubled down on Web3, on tokenomics, and Denari in partnership with Redbeard Ventures is offering, I believe, up to 300K for the token accelerator. So I just wanted to learn more about Denari from you guys. Maybe what was the motivation behind putting it together, and what kind of support and resources could founders applying expect from the accelerator?
Yeah, I'll take lead, and Kevin, feel free to chime in there as well. So when we started thinking about Denari Labs, when Drew and I, so Drew is the managing partner at Redbeard Ventures, when we started brainstorming as to what is the single most gating factor for project success or completion or a token's launch, the answer kept coming back to tokenomics, right? And we felt the same way when we were providing that end-to-end advisory service to our clients. Without tokenomics, virtually nothing can happen, right? In the order of events, you cannot have the right level of legal conversations, right? You cannot facilitate like creating foundations or directors and have the right token allocations to investors and so forth. Without that, you cannot start building your smart contracts, right? Because eventually all of that really needs to be encoded there. Without that, you cannot initiate the conversations with exchanges, market makers. They all need your tokenomics, your white paper in order to dig deeper and ask further penetrating question in terms of like what your project is about. Without that, you cannot set up a DAO. So that was always the gating factor, right? So 60-70% success of your project is pretty much dependent upon how your white paper and tokenomics turns out, and do people believe in what you're trying to sell to them. So we took that away as a learning because that's typically the first step in a process of launching a token. We wanted to create an accelerator that speaks to that first and foremost, but at the same time leveraging our network and our understanding of how to launch a token, provide those additional services. So it's not just a 3 month of tokenomics work, right? We want to make sure projects that are selected in this program get the help, get the connection, get the network on how to do things in a compliant, regulated, and the right manner. Right, launching a token at this stage is not hard. You can use a bunch of different launch pads, they exist, but is that how you want to launch token? I mean, the answer to that also varies from project to project. But what we believe is there's room for right business models, viable business models to have the right tokenomics, the sinks to it that really attracts the community, keep them together, and continue to provide value to projects day in day out. So once we were happy with that thesis, like yes, this is the cornerstone on any for any success, decided to launch Denari Labs as the Web3 tokenomics based accelerator. We went as far as to make sure that this is what we are really trying to achieve here is get your tokenomics right. So we're looking for 5 startups in our first cohort for experimental cohort, and we are going to be providing similar services that we do in our advisory side of the house. But Drew and his team will have that investor knowledge as well. We have a broader network that will bring together to provide input to these teams and these founders and how to build their go-to-market aspect. Eventually there'll be a demo day, where we'll bring in a bunch of investors who can potentially invest in these startups earlier. What we're providing them in return is 100K in cash, right, as an investment. And depending upon what stage these startups are, we want to include the best startups in the space who have that chance of surviving, have success. And the percentage of equity in token may vary and depend upon the stage that company is in, how big the team is, whether they're too early or too late. Those will be determined as we get closer to the launch in itself.
Yeah, thanks for sharing that. Yeah, Kevin, sorry, go ahead.
I was just going to say real quick, the other thing is, when you think about tokenomics, right, it's not just the allocations piece of it, right? It's the actual use cases of the token itself, right? How is a user going to get onboarded in, using the token? How is a user going to transact in the token? What are the different personas? What platforms are going to use? What entities are going to be distributing, this, right? So there's, a sort of practical sort of lens to it, like what's the actual token use case, but then there's also a legal lens as well too, right? So one of the things that we end up running into is, throughout the course of these token launches, a tremendous amount of energy can be spent on developing a product, developing a token use case that you realize, one, maybe the market doesn't necessarily resonate with it. But secondly, and kind of, more sort of like, importantly, hey, from a legal sort of, compliance sort of standpoint, this is not allowed, or there's a lot of pre-steps or a lot of work to be able to get to that point, right? So it's great even early on to be able to discover those things so that, you can, say, hey, like, wait a minute, actually, like, if I want to do this, right, then I know that there are a bunch of pre-steps that have to happen. And that's the kind of insights that we want to help to be able to cultivate so that, teams can have the best chance of success on the other end of this.
Thanks for sharing that additional info, Kevin. I know we are only 15 minutes left, so if anyone in the community on the call has any questions, feel free to raise your hand. I'll call on you one by one. Usually these guys charge a lot of money for these answers, so if you want to get some free work done, definitely raise your hand. And the final question for you guys from my end is just, with Web3 evolving as rapidly as it is, what are some trends, innovations, ideas that particularly excite you and still make you bullish enough to keep showing up in this space? Rohan, maybe we'll start with you for this one.
Yeah, I think there's a lot of cool stuff being built, right? I've been through these super cycles and super bearish cycles like 3 times at this point. And each time the market just keeps getting stronger and stronger. I think what's exciting for me is, I think, apart from the fact that we need a better user experience and design, if you're looking at it just purely from a vertical standpoint, I think DeFi, as I'm super excited about, will have a massive resurgence. And in this scenario, I'm thinking this would be more sort of white labeling into your traditional financial products. I think the real value of DeFi could really be utilized, especially with the recent announcements with Citadel and BlackRock and everyone trying to pounce in and get part of the action. That helps support a lot of those use cases too. And 2, I think we'll see the actual onboarding of users through games. And when I say games, I'm just putting the broader umbrella around it. I mean, PvP games, AAA games, gamification aspects, gambling, esports, all of that put together will be a massive way for users to onboard, because whether it's downturn or bull run or a bear run, people enjoy, right? That's a good way for folks to free themselves from stresses. And last but not the least, I think the real value creation that will start happening is less on the L1, L2s. I think, yes, there will be some who will survival winners, but where I'm really focused on the bridges that exist, right? Without bridges, they're all like multiple different internets, so to speak, and without much user value or value addition to the end user. So bridges will come across as winners. And yeah, there are a bunch of underlying technologies, but those are the three big areas that I'm really focusing on, and that would survive in the next one.
I mean, from my end, I'll come into it much more from a, I guess, consumer and sort of use case kind of perspective. But I'd say, and much more kind of from a Web2 kind of point of view. But I'd say things like music rights and royalties, the ease of basically distributing these types of things using, Web3 concepts, using blockchain to be able to, more transparently take care of these things on the back. And I think that can be pretty tremendous with the right teams attached to solving those kinds of problems. Ticketing is something I talked about, and I think that's going to continue to happen. We saw Avenged Sevenfold, very first one with their activation with Ticketmaster. And I think a lot of lessons learned there, but I think that still has a long space and a long sort of tail to grow. Loyalty programs as well too. And then really, things like, NFTs or NFT backed, activating amazing experiences. It could be travel and entertainment. I remember, when Coachella first announced their NFT sort of program, it was a couple years ago, and they had launched to go with FTX. Unfortunately, FTX was a great platform at that time and a great product to be able to launch it with. But I remember seeing it and said, hey, we have these Coachella keys. It unlocks lifetime membership or lifetime access to safari tents at Coachella. And these are like $10, $15, $20,000 a pop. And I was like, these are going to go for like $250,000. But it wasn't the point that, that they had that activation. It was more sort of this sense of awe that, hey, like there's something digital that can unlock this type of experience. So I see a lot of more of these kinds of activations that can be powered by Web3 start to come to light, and that creating that sense of awe for folks.
Answers from both of you. My work at MasterCard, like leading Web3 products, a lot of it was around building token gated experiences for our clients. So, definitely a space that I've had a lot of interest in: concerts, football games, all of that. And Rowan agree. I think, bridges more than chains. I like the concept of multi-chain, super bullish on it. And gaming, obviously, we had bored Elon Musk on the last call, talking about his kind of perspective on gaming with board box and everything as well. So yeah, great answers. I see we have Samir with his hand raised. Samir, do you have a question for our guest today?
Yes, thanks, Satvik, and thanks, Rohan, for telling us about the focus on tokenomics. So my question is that tokenomics is a relatively, I mean, everything in Web3 is an experiment, but tokenomics more so, right? So there's no set formula like, okay, here is the perfect tokenomics, here you go. So my question is, internally, when you are thinking about tokenomics, are there like templates that you have prepared? Okay, these are some of the experimentation that we have done that works. And are you also developing your internally within your team? Okay, like, there is research ongoing that, okay, we should do this on tokenomics, because I think it's like an evolving field which is so new that nobody has a perfect formula which works.
Yeah, what I'd say to that, Samir, I think it's a great question. I think we think about it day in, day out. But the best way to think about it is economics itself is super theoretical, right? It's a
Yeah.
continuously evolving space, period, right? I don't know a single economist who has created an economy ground up perfect in real life, let alone now you're expecting new economies to be created via
Yeah.
tokens or monetary value in the digital form. So that's one. So that means this is going to remain a continuous experimentation. There's never going to be one size fits all. And it'll all come down to who, at the end of the day, you're trying to cater towards. And then goes back to the question, what your product is and how this token or the money flow, so to speak, or the monetary flow in this case really impacts your economy. You can only have scenarios and hypotheses, never an accurate answer, right?
Yeah.
So a lot of it is, yes, there exist templates based on the work that we have done, but will that, like, let's say an 8-point template apply to someone like a Jam City, which is a gaming studio and has a bunch of games coming out? Not at all, right? So we have to evaluate on a case by case basis what is the end intention. And last but not the least, it's a lot of the tokenomics aspect and what you cannot do within the walled gardens versus taking it more decentralized or to the broader economy comes down to the regulatory and legal restrictions that get slammed on, right? So at least in the US, might be a bit more easier outside, but that's where you run into a lot of issues and you have to, scale back some of your aspirational thought process and get back to work. So that's what I would say, Samir.
Okay.
Hopefully that helps.
Can I ask another question, Satvik?
Sure.
Yeah, we have a
Yeah,
few people with their hands up.
Sorry, can I go ahead? Sure, thank you. Yeah, so Rohan, I worked with some startups where I helped them with the bunch of tokenomics when we were investing in them as well. When you talk about startups who are actually coming from the Web2 space, they do not think that tokenomics would be that important. Of course, we know we have been in this space. So how do you work with those teams? Because the problem becomes that they need to understand that this is really important. It does not, there is no fit formula. So what those startups did was they copy pasted, they got a templatized model, and these were like from tier one funds. They got the models and they're like, here is our tokenomics. So do you also do certain things where you are educating them on understanding the importance so that they realize the value and then go ahead with it, or you take startups who are actually understanding the value of that?
Yeah, I think the meeting of the minds is quintessential for the success for us to be able to work with these startups, right? So if you're steady on like just copy pasting, then and then that's what you want to do, then so be it. But our goal here as an advisor is to surface all the data point, all what we have learned and understood, the models that we have created to showcase quite clearly through quantitative means that that approach is not going to work. Oftentimes that's what ends up happening. And what we have noticed also, like 60-70% of the partners that we work with, they come to us after realizing that, hey, previously we thought this was okay, but now we need some help because the tokenomics don't make sense, or token prices basically on a decline. What do we do? So it's an educational process, right? As any advisor would tell you, it's 80% education, 20% implementation. It's convincing, is selling them on the value proposition of why something is important, and that's what we do as well.
Exactly. Thank you so much. Thank you, Satvik. Thank you, Rohan.
Awesome. Thanks, Amir. Jason, do you have a question?
Yep.
Sorry.
Thanks. Yeah, mic was closed. Classic. Quick question. Yeah. So ultimately, most of the conversation had seemed to turn or revolve around pre-launch token. Our situation is more around like our token has already been launched, and it was very early for us to really sort of have a very in-depth strategy around tokenomics. We really looked at top level elements around like supply and all of those things and distribution. Now that we're getting closer to product launch, I'm wondering, are you seeing more and more projects coming to your service around advisory and post token launch? Because I've been approaching a bunch of firms to have this discussion, and a lot of them, their services is really geared around pre-launch. But obviously now with hundreds, if not thousands of projects that launched in the last couple of years, I guess you're probably seeing a lot of those that want refinement. And ultimately, I think the reality is tokenomics is not a thing that is set in stone. It's constantly evolving. The products that they're interacting with from a utility standpoint are evolving as well. And yeah, I mean, ultimately, we're a product team. We're not you know we're not knowledged that much around the tokenomics side of things and the utility and how can that work in a protocol and all those sorts of things. So real question, do you also take on projects that have launched their token? And similar, question with the incubator, is that only for pre-launch token?
Kevin, you want to take that?
Sure, yeah. So yeah, definitely very, very astute observation. We are working with projects that are at post-token launch. I mean, I think there's a distinction between, sort of, the token engineering sort of aspects of it, right? And the deep sort of economics around the token economy itself and how the token is performing in the market and the liquidity sort of aspects. That's one category, right? The other category,
which we've all done and mastered pretty much. We've deployed the liquidity, that's fine. We've engineered all the smart contract, it's audited. We've raised, the capital, and now it's really about finding the match between the products that we're bringing to market. So the community sees, and also the market sees, there's synergy between both. But most importantly, I think that there is a true utility, not just a fit to pump or something like that. There is a real value added to have it in there.
Yeah, I mean, one of the things that we're working on, especially for post-token launch, is around DAO strategy and DAO implementation. So now that there's a token that's already launched, how do you think about that specific utility, and how do you layer it into sort of the decentralization story? Fully decentralized on day one is our progressive decentralization. How do you set up the DAO in a way that makes the sort of ecosystem and the vision for the product have longevity? How do you sort of decide, like, the for-profit software company, what's its relation with the DAO in itself, right? We do think that, for many of these tokens, many of these sort of, more protocol-based platforms, that yes, like it makes sense, that it would trend more towards a DAO sort of direction, right? May not be applicable for all, but we do see a majority of that. So that's one area that we're really leaning into, and trying to help projects really think about sort of what does that DAO go to market look like? What does that strategy look like? How do we think about the different verticals that we want to fund? We don't want to simply have this be, hey, like hands off, here's a token, community, do whatever you would like, with the ecosystem. So really thinking through those aspects now, and yeah, that's a great point. Rohan may be able to talk about sort of the post-token launch side of things as it relates to the accelerator.
Yeah, Jason, now that I have a little more clarity, in this scenario, no, I think we'll be open to considering what the product is, what the business is, and if there's a revamp of some sort is required from a token perspective, that's also applicable for Denari, as well as the services that we also provide on the advisory side of the house, which is, we have a bunch of big name products we're working with, like the D-Gods, and they have their dust token, and we are figuring stuff out. Same as with Sandbox, how to kind of research some of the community and how to make it better. Right, thanks, Kevin. So yeah, I think we're open, and we see a lot of that happening, given there's thousands of tokens out there. Not everything has been done right. Left, or some sort of critical mass in place. It'll serve you well to reconsider, to redo the tokenomics, or find the right sinks that will help engage and bring in the right shift to the project itself.
Perfect. Thanks.
Jason, thanks, Rohan. Rohan, do you have a hard stop, or do you have a few more minutes?
I can stay in a few more minutes, yeah.
Okay, sure. Yeah, we have 2 more questions, it seems. Fiona, do you want to go next quickly with your question?
Sure. Thank you so much. I really appreciate this. I feel like I went to Web3 school for 10 years in 1 hour. So I'm Fiona Aboud. I'm an artist, and I'm trying to found a company that is a private label credit card that's using fiat on the front end. and it's empowering artists to fund change. So using like crypto on the back end to, instead of art and credit cards being associated with just like a one-time commission, the artist actually has like a stake in the fees and the funds that are normally extracted from a credit card company. So what we're trying to do, trying to apply for, I'm sorry, oh God, I'm getting a call. We're trying to apply for a grant or from a blockchain, and I'm just wondering from you, if you have any advice in terms of which ones we should go after. We're considering Binance just because we have that fiat crypto on kind of on off ramp, but I was just wondering what your perspective was. Thank you. Sorry about the interruption.
Yeah, no, first off, like sounds like a great product, Fiona. So congratulations on that. As far as the token utility is concerned, I think that's a great value add to a lot of creators out there who want to actually have equity. I put that in quote in the project and the art that they're selling. And I think it's a good incentive mechanism. From change perspective, my question to you is like, what are you trying to optimize here for? Like you're expecting a large volume of transactions happening, or is it you want something to be more secure? Like a lot of those comes into play.
No, that's a really good insight, and this is one of the reasons why we're trying to talk to as many people in different areas. I think from our perspective, like the fiat and crypto kind of chasm, it's just still a little challenging, and like we're learning a lot about like regulation, like where we should incorporate, even though we want to be like a US based product. So I was just trying to think of a way to like ease that transition from like when you collect all the fiat from the fees and the regular credit card stuff and then move it into crypto. And with my example, my art supports poverty alleviation, so it's on the Celo blockchain, the protocol that I use. So like how like normally I sell an ETH, and like that would get transferred with a bridge to Celo. So from my perspective with the fiat crypto, like if it's just in one ecosystem like BNB, it'll make it easier to then distribute. I don't know.
Yeah, I think that's a smart way of thinking. So yeah, I think BNB is a good option. The only advice, like I obviously have to like look through more in terms of like how it's all set up, but the options that come to mind is probably the Polygon, the Binance, and last but not least, AVAX ecosystem, right? What you really don't want to end up, what you really are, if I'm hearing it right, what you want to optimize for is settlement of it, right? And minimizing the cost or the gas fee, so to speak, to do that settlement, because you'll be doing it in batch, right? So if you're stuck with Ethereum on any given day, it could vary from nothing to $4,000. So we don't want to end up losing cash. So I think anything that has a small transaction fees attached to it, can settle fast, has a decent level of security, and is somewhere or the other battle tested. That's your bet, and I think those three come top of mind. Yeah, thinking it's Solana, but it's in my opinion, it's still a centralized chain in a lot of ways. So
Thank you so much. We actually have a meeting with Polygon tomorrow, so I'm like,
great.
yeah, thank you. I really appreciate you.
Yeah.
This last question. Do you want to get through that quickly as well?
Yeah, thank you so much. My name's Alex. I've been in UX design research for about 8 years. So about a year ago, I realized that there was a UX problem in Web3, and that's when I became kind of a working person rather than a fan. I went to ETH Denver, and I saw a real problem with teams coming together, right? So you had talked about kind of working with early startups, and this question is mainly around kind of resourcing. So how do you help people put the best band together, if you will, right? Like how do you find engineers find me, or how do I find engineers type thing?
Yeah, I mean, these hackathons are a great way to do it, because that's where a lot of developers end up going, right? And you'll figure out rather quickly that while the code is great, the design not so much, right? So it becomes a very complex story when you're trying to tell it. A picture tells what 1,000 words can't. So that's usually what's been the approach. So hackathons is a great place. Any of these developer focused hackathons or conferences that makes like ECC that's coming up in July. That's a great for creators as well as developers to go mingle and kind of figure out what's happening. But other than that, like, my earlier point around, like, if you're a founder, if you're an operator, true operator, I think the onus is on you to kind of go like cold call, cold message people and see get their insight and try to sell them on. Yeah. Because if you ever like build this into a business, that's the first thing that they're gonna know, right? And most of the investors are gonna question like, how good are your sales skills? Like, how can you sell? Can you not only selling the product, your vision, but you're also selling your potential co-founders, founders, the early employees. The first 5 are the most important, right? Because they'll be getting the majority of your equity or token, whatever the case may be. So have you onboarded the right one? So it's a mix. There's no one right way. Like sometimes, like I'll give an example. So I advise and invest in this company called ThrivePoint, which build the infrastructure platform for DAOs and Web3 communities, and they incentivize them. So this founder, I found him so impressive. Like he cold messaged me on LinkedIn, and he started pitching me the idea. He had a very different vision back then. He was doing non-profit stuff for organization for any community across the globe to use crypto, but the user experience was Web 2, but he was trying to do something in Web3. There was an email login and then a password, but there was also MetaMask. I straight up told him, look, you need to pick a lane, either Web2 or Web3. Moved into MetaMask, give up on everything, and then from there on, I knew that he had the hustle, he had the right mindset, and he knew what he wanted to build. We went deeper into like creating an experience for the natives, right? Because Web3 is small, you have the right audience, you have the right technology set, now you can go ahead and do it. So for me, the starting point was that he cold reached out and he asked straight survey, starting asking questions about like, getting the feedback, getting the like 5 million from a bunch of different seed investors. So that's how quickly the space moves once you know you have the right team around, right? So he brought all his old founders or CTOs he had worked with in the past. So that would be the most ideal state.
Do you ever have a situation where you have to, in your advisement role, kick Ringo out of the band and bring in a new drummer in, or something like that, if you will?
Always, all the time, right? Like I think when you're early, you don't want to create a complete static team, even if things are not working. Keep a hire fast, fire fast mentality, and try to have the non-essential roles outsourced as much as possible. So yeah, at the end of the day, your cash burn is what dictates your success when you're that small.